Hi, this is Vijay Bambani and I'm recording this video from the safety of my residence because I am keeping indoors along with everybody else in line with the lockdown instructions. I hope you and your family are keeping staying safe and indoors and therefore obeying the lockdown instructions. This video is something that I have been mulling over for a couple of days now, and the extension of the lockdown countrywide has basically strengthened my resolve to record this video. If I was to give this video a title, it would be Investments and Trading in a Post-Corona World. I would basically use a lot of anecdotal stories and real-life experiences that I have had the pleasure and privilege of going through in my 34-year career as a professional trader and investor. But if I was to tell you one compelling story, it is what I was told while I was a management student after my graduation. Well, our finance professor told us that we should dare to dream. Dare was the word he used. We should dare to dream if we had an equivalent in liquid cash investments, an equivalent of 25 future years of household expenses invested safely in income yielding securities. Now remember, I am somebody who entered this market in 1986. In those days, it was commonplace to earn 15% interest on your bank fixed deposit from a public sector bank. You heard me right, 15%. Now, why did this professor use the analogy of 25 years? He said that if you kept aside this much money, you would receive 15% interest from a bank fixed deposit, which would protect you from the inflationary effects that are known to mankind. And once you have that money, remember I'm talking of liquid investments, the value of your house, the value of your car, your wife's jewelry, etc. is not counted. I'm talking of interest-bearing liquid investments. Come to think of it, and I've done so many videos, especially the one which was titled The Secret of the Rich Traders in the Fast Profits Daily video list. You can actually go back in time and check it out. I have said that the problem for the fixed investment investor is that yields on fixed income securities, whether it is a bank fixed deposit, whether it's a sovereign bond, whether it is corporate debt or commercial deposits, etc., your interest rates are going to come down. Which means when I was a management trainee, what was required was 25 years of forward household expenses to be kept at 15% interest. In this day and age of almost 5.5–6% return, you will need possibly 2–2.5 times more. Which means you need to have 50 years of forward household expense money to be deployed in fixed income securities before you can dare, I would borrow the words from my professor, you would dare to dream of retiring. Another story I would tell you. In 2012, I traveled to Singapore expressly with the intention of spending a day with Jim Rogers. That's right, the world's most high-profile commodities trader and investor, who was at one point in time the co-promoter with George Soros of one of the most high-profile hedge funds out there. Now, when I was traveling to Singapore, I was very excited, and the very first day that I landed in Singapore, I rushed to Jim's place and I spent a few pleasant hours at his residence learning a lot. And thereafter, of course, one goes sightseeing and shopping, etc. Who doesn't? You come to Singapore, you want to look around a bit. I realized one very important thing. Almost all the taxi drivers were extremely well informed. They knew a lot about international affairs, about world politics, about business, about India, the whole universe. And many of them were of advanced age. I asked one of the taxi drivers as to how he knew so much. Was it because they chatted with each other on the Citizens Band radio that every taxi driver had? Were they listening to a lot of news on the radio? Is it because they were basically reading a lot of newspapers, etc.? What he told me actually made me sit up in my chair in his taxi cab. He told me he was 70 years old and had retired as an executive in a multinational company. And because the government does not, in Singapore, the government does not encourage senior citizens to basically live off the state, and therefore it does not have too many old people's home, etc. Unless you're invalid, you're incapable of walking or working or whatever. He said, we prefer to work till the day we die, if we can physically, of course. Now, what do these two stories interlinked together mean for you as an investor or trader in a post-corona world? Number one, like that gentleman who was a taxi driver in Singapore and extremely well-informed, extremely polite and extremely clued on, chances are you as an investor who's kept aside a solid block of money in fixed income securities, which is what I completely agree with and what I have done as a matter of fact. A substantial portion of my investable float is in fixed income securities, preferably sovereign money, sovereign paper, and that takes care of, the interest takes care of my household expenses, and then what is left is something that I dabble around with in the market. So to that extent, it doesn't bother me if my trade or an investment is going against me. My lifestyle, the number of chapatis or rice that I feed my family does not change because my trade or an investment is going wrong. To that extent, what will happen in a post-corona world is you will have to set aside, if you have the money, to more and more fixed income security because your interest rates will fall. Even if you do that, you will take home less amount of money unless, like that gentleman who was driving a taxi cab, you do some extra work. Which means you can't just say that in a post-corona world you're going to be a commodity trader only, a currency trader only, equity investor only, or an F&O trader only. Instead of behaving like a dedicated mutual fund. Now, mutual funds by their charter are basically, they predetermine as to what they will do. So a value fund will buy long-term investments, a growth fund will buy aggressive growth stories, a small cap or a mid-cap firm fund will therefore buy only these sectors. This is a mutual fund style of investing. Cut to the other end of collective investment schemes, the hedge fund industry. Now, the hedge fund industry are pure alpha boy. Alpha boys are, alpha in the very sense of the word means pure, absolute profits. Forget about the fact that the market is bullish or bearish. You have to make money come what may. So your mindset in a post-corona world will have to change from a mutual fund manager to a hedge fund manager. You will have to take every opportunity that comes your way to make money, to put food on the table for your family, and to maintain the same level of lifestyle that you're enjoying in a pre-corona world. To that extent, you need to be a lot more skillful, you need to be a lot more informed, you need to have what I call the equanimity or complete harmony with the world around you, the financial world around you, which is why I keep harping about a 360-degree worldview in my videos, in my reports, or in my emails that you might be getting as a subscriber to the weekly cash alert or the fast income alerts, etc. You will have to upgrade your skill sets substantially. You will have to be a participant in the market across all asset classes without fear or favor. You cannot say that the currency market is not your cup of tea, the commodity market is not something you're interested in, the fixed income or the bond market is not something that you would care for. you have to have your finger in every eye. This is going to be a challenging time, but I assure you, for a discerning investor, the very fact that you are watching this video on Equity Masters channel makes you a savvy investor. For us, the sky is the limit. This is a very, very interesting phase in your life and mine as professional investors and traders, and I assure you, we're going to make the best of it. Before I sign off from this video, let me remind you to click like on this video if you're watching this on YouTube. In the comment section, do let me know what you think about this video and what other videos you would want me to cover in my coming recordings. Do not forget to share this video with your family and friends and help me spread the cult of knowledge-based investments and trading. And hey, I'm on Equity Masters Telegram channel where I put in at least 3 to 4 posts every day, Monday to Friday. The handle is Equity Master Official. Do join me on that channel and let's exchange knowledge base out there. Do take very good care of yourself and your family, your investments and your trade. Till I see you again in my next video, Vijay Bambani signing off for now. Thank you very much.
Also, do not forget to subscribe to my free email newsletter, Fast Profits Daily, and get my free guide, How to Trade Markets Like a Pro.